All right, guys, jumped into a T-bond futures long. This is my second trade for bonds this year. You know, the other one was end of January, where we traded bonds to the upside for not the same reasons like we do now, but many of the same reasons. You know, at that time we had inflation still decelerating. That was before the recent upside surprises that we had. Even though growth data was just starting to surprise to the upside, the markets were still pricing in aggressive cuts for the Fed at that time. We had basically the fundamentals and the technicals all lined up for a move to the upside. We traded that into the 124 region. We took some profit there. We removed risk from the trade completely, and our last units was taken out at break even with that push to the downside. Now, we stayed patient after the markets failed once again to gather enough upside momentum in the bond market, and we've been staying patient ever since, because after that there was just that continuous concerns, upside surprise in growth, upside surprise in inflation, upside more cuts being priced out almost every single week. So there was a lot of reasons to just stay patient on bonds. I didn't want to short them, from these levels, which probably would have been a better trade in hindsight, but I was looking for opportunities rather on the long side, purely from a risk reward perspective. Now, why did we jump back into this week? Very similar to the dollar trades that I got in. I do think that, last week things changed for the markets and the Fed to some degree, at least. The Fed refusing to put hikes back on the table, I think puts more upside pressure in bonds, i.e. downside pressure in yields from here. Does that mean that, does the Fed's decision last week, does that change the market's fears about inflation? Not really, but if we look at the inflation charts, if we're honest looking at the inflation charts, right now I just don't see a lot of the angst that a lot of market participants are looking at. Is there reasons to be concerned about for inflation? Yes, because it's not decelerating as fast as we hoped it would. We know we're near target yet, so there is concerns about inflation. But if you look at these charts, this is looking at core CPI and core PCE. Are these charts enough for us to go all out crazy on inflation right now? In my opinion, not yet, right? We need more data. We need more information. And I think, in my opinion, I think the Fed did the right thing last week, not freaking out about the recent data, because we just haven't seen enough for them to suddenly pivot all the way back to hikes. And I do think that means more, potential upside potential for bonds here, looking at inflation as well. I mean, if you look at the data across the board, looking at both labor, looking at both inflation, there's clear signs of more balance being brought into the economy, right? We're seeing more of a supply-demand balance taking place. Yes, inflation surprised higher, but we're still much lower than where we were. The labor market starting to show more clear signs of slowing down as well. And we looked at this chart earlier today, which shows us the City Economic Surprise Index for the US. We've seen that very clear deceleration to the downside in the data. All of these things for me means there's arguably, from a probability point of view, a higher probability for upside in bonds here compared to more downside in bonds. Now, what can make me wrong on this trade? Well, firstly, we've got incoming inflation data starting again next week. If those inflation data surprises meaningfully to the upside, that's going to push bonds lower again. If we start seeing growth data coming out better than expected, that can put downside pressure in bonds. But that's all coming up next week, right? So this week, the biggest risk that we have is that the Fed speakers coming out pushes back aggressively against what Fed Chair Powell told us last week. If we have the likes of Williams, for example, coming up this week and saying, no, I think hikes are back on the table or should be put back on the table, then I will be getting out of these trades that I got in today very, very quickly, right? If something massive happens on the speaker front this week, there's no reason holding on to trades like this. If the speakers come out and they're like, oh yeah, we don't agree with that, I think hikes are back on the table, that shows us there's not a lot of agreement among the Fed, and obviously that poses risk for trades like this. But with inflation, still lower, even though not as low as we would like, but still lower, with growth slowing clearly, with the labor market slowing clearly, I just think that puts more upside pressure in bonds. And we saw once again, last week from the Treasury with their quarterly refunding announcement, that they weren't really they weren't really too keen, on spooking the markets on the bond front. They kept things pretty as expected, as you would expect, from a funding point of view. And I think, again, that eases up some of that downside pressure in the bond market as well. There is obviously concerns going into the months ahead that maybe funding will need to be ramped up again. And when that happens, and if they do need to up that, the markets will obviously deal with it at that time. But that's not a story for now, right? That's a story for next quarter. Over the next 2 months or so, the markets will be, paying more attention to that. But that's not an issue, I think, for the markets at this stage. So just a quick update here on this trade. And obviously, what's nice about a trade like this is because we are, trading from recent or very close to recent lows, that's your obvious stop pivot, right? How do I know I'm wrong on this trade? Well, if we break below this swing, then I know I'm wrong on that trade. So if we take that out, hopefully we'll be able to get out before that. So again, like I said, if Fed officials comes out this week and they say, oh no, I think hikes are back on the table, then yes, we'll probably be scaling out of that trade fairly quickly. But for now, I think the probability is skewed to the upside. And if that changes, or if I get out of the trade as we manage a trade, I'll make sure to keep you guys posted. All right, guys, any questions, don't hesitate to let me know.